We need your support. Click the like buttons below. Now onto the video.
Welcome to ReadYourTicket.com. Here's a quick video to help you understand or learn about the two best price patterns to take advantage of for retail investors. Pattern 1, the eruption. Pattern 2, there is a greater fall. These two names are for demonstration purposes only. I'll explain further on. Of course, capturing these patterns in the early stages requires skill and patience. The only approach we believe to accurately judge these two patterns is a fact-based evidence approach. Of course, Richard Wyckoff and Richard Ney logic is the answer to determine these patterns. ReadYourTicket.com have the tools and materials for you to find and investigate such patterns. The first pattern, the eruption. Here, this is a period after a long trading range within a tight sort of price action, low volume, bit of dullness, and now we get our breakout. A dramatic change of character. Not a mild change of character, a dramatic change of character. Some news, some fundamental change has changed the outlook of the company. This is the pause, the build-up, and then something happened, a news event, and a slow build-up of price and volume. In this particular case, this is Fisher Paykel Healthcare, an Australasian stock. They were distributing a healthcare item into the United States, and the middlemen were removed, and hence the profits of the middlemen removed. The profits grew as the middlemen distribution costs were removed, and they supplied direct to the sectors in America. So this is when the change happened. They needed distributors to go through the right channels. But now they are removed. They started making huge profits. That was the news item, and as you can see, and of course in Australasia and New Zealand and Australia, we have our own share buying schemes, and obviously they've got behind this winner and they pushed it higher. So if you got it, if you missed the first bar, you got into it late, you understand what was going on. 4 to 12, 4 to 22. It's a pretty good winner, even on an international scale. This is the eruption, as it explodes higher with price and volume. Here's another pending eruption I believe is going to happen. This is the silver ETF. Nice long trading range, volume a bit dull, volume starting to pick up. We want to see if price can get over $20, but watch silver. The next pattern. This is the greater fall. This means when you buy the dip and you wish to sell it at a higher price, someone else is going to buy it off you because they believe it's going to go higher. One day that person who buys it off you at a higher price is the greater fall. But this is McDonald's, as you can see in the 2008-2009 crisis of the global financial crisis. It didn't even go down. It was that strong. If you bought every dip, there was someone at a higher price willing to buy it off you. One day, further up the road here, the greater fall will be the fall. So this is a pattern you can also find using Richard Wyckoff logic and Ney logic and scanners on ReadYourTicket.com. A perfect Wyckoff cause and effect markup phase. Let's look at other potential greater fall trades. This is the one that's building up, and this is gold. Big base pattern, starting to break out. Higher lows, buy the dip is working. Why is this working? Obviously because of the extensive money printing going on with central banks and the growing risk of a global recession, and obviously the larger the US deficits, the larger the amount of debts, larger money printing. As we know, this trend here was a correction of this long uptrend from the year 2000, so it did 10 years up, and it has paused for, say, 4 years, and now we're starting to get a trend up here. Can't be denied. And here's another one that looks pretty good. This is Royal Gold, climbing higher, breaks out of a big base, higher lows. This is a royalty company of gold's mining. So buy the dip is working. Keep an eye on that one. Thanks for watching. These are the two top patterns for retail traders. The Eruption, which is the Richard Wyckoff breakout, which is emphasizing the huge change in character from a base to a rally. The Greater Fall is when you get buyers coming in on the dip, and someone is going to be more foolish than you and buy it at a higher price, until one day that fall will be a fall at a higher price, because the price will not go higher. So you're buying the dip and someone will be buying it off you at a higher price. Thanks for watching.